Let's talk about Tech Mahindra also, that reported a steady set of numbers. For the first quarter, revenue, EBIT and EBIT margin managed to meet the street expectations. However, PAT came in lower than what the street was penciling in, despite seeing over 8% jump on a sequential basis. Darshita is now joining us with a roundup of Tech Mahindra earning and key takeaways from the management con call.
Right, Tech Mahindra reported an overall mixed quarter for the first quarter FY27, and if we look the revenue, EBIT and the margins, EBIT margins were largely in line to what the street was estimating. But the profit was something which missed the street expectations. Now, so start off first with the numbers. The revenue grew over 4% sequentially, coming in at 15,700 odd crores, and the EBIT rose nearly 9%, taking the operating margins up by 59 basis points, coming in at 14.4%. The net profit also increased on the QOQ basis but came below the analyst estimate. Now, operationally, the quarter was also encouraging. Constant currency revenue growth accelerated, coming in at 2.6% for this quarter versus 0.6% for the last quarter. And the deal wins also stood at $1.08 billion, marking yet another billion-dollar plus quarter and highlighting the healthy client demand. Attrition also improved to 11.8%, reflecting better workforce stability. Now, the growth was driven by manufacturing, BFSI, healthcare and the retail, while the communication and the technology and media and entertainment segment remained relatively weak. Now, on the management commentary, company said that FY27 marks a shift from a margin recovery story to a sustainable growth story, with confidence of outperforming peers on the revenue growth. The company continues to strengthen its AI capabilities with over 350 AI agent builds and 65% of employees now AI certified. Management also highlighted strong demand across AI, cloud, cybersecurity and the digital transformation services, while reaffirming confidence in achieving around 15% operating margin in FY27, supported by healthy order book and a robust large deal pipeline.
Let's also go across and listen to what management had to say on their segment growth in Q1. Let's listen in.
The banking and financial services sector for us grew 8.1% year on year. We continue to see healthy demands in areas like payments, modernization, wealth platforms, regulatory compliance, identity and access management, and AI-led transformation. During the quarter, we also announced the acquisition of Avant Techno Solutions, a Canadian-based firm specializing in payments, modernization, and wealth platforms. The acquisition is aligned with our stated strategy of deepening our presence in payments and the wealth segment, which we have consistently identified as important growth areas. It also strengthens our position in a structurally high-growth segment of financial services. The manufacturing sector for us grew 17.2% year-on-year. Our focus remains on scaling sustainable growth across aerospace, industrial, and process manufacturing. We continue to see strong client interest in intelligent, data-driven operations that bring together AI, data platforms, engineering, and enterprise systems at scale.